Hey folks, Chris Versace here from Tematica Research. We are kicking off the start of the final month of 2024. Hard to believe. That's right, this is the week ahead for December 2nd, but because we ended November last week, let's do the smart thing and take a look back at what we saw in November, a bit of a rewind for the stock market, if you will. And what we see when we do that is November was a strong month, stronger than usual. It typically is a seasonally strong one for investors, but this year the S&P 500 added 5.7% in November. Nasdaq was up over 6%. All in all, I think we can trace it back to the outcome of the presidential election. A lot expectations, let's just say, are running high for what the Trump administration might do when it comes to tax cuts, tax cut extensions, a reworking of the regulatory framework and other agenda items. The big question mark looming out there, though, is tariffs. What will the outcome be? We've already seen some saber rattling by President-elect Trump when it comes to Mexico and Canada. He's also talked a little bit more about the dollar and BRICS. So there's a lot kind of going on. But as we think about the coming days and the rush towards the end of the year, when we put it all together, I think what we see is that the market is once again back in a state of euphoria. That's what the Citibank panic euphoria model shows. But other indicators, whether it's the fear and greed index that's flashing greed, or other technical indicators such as the short-term oscillators that say we're overbought in the short term, and then we kind of throw in the fundamental valuation work where the current PE on consensus 2024 earnings for the S&P 500 is around 25 times and roughly 22 times expected earnings for next year. Put it all together again, like I say, time to be prudent. Yes, we had a very big run in the market in November. December is typically extremely strong, but remember, this past November was far more robust than we usually seen. Things might be a little bit ahead of themselves, and we have a number of things to look forward to this week, next week, and then the Fed's next policy meeting on December 18th, which comes in the final full week of trading for the year. That's right, soon after that we're going to have the Christmas holiday and then the New Year's Eve holiday, which tend to be very light trading volume weeks. A lot of folks off for the end of the year. So it's really the next 3 weeks that are going to matter most, with the lead up to the data from this week, next week, and then the Fed policy meeting. So with that, let's talk about what's on tap for this week. Well, first, it's going to be the tally for the Black Friday to Cyber Monday shopping weekend. So far, results are shaping up, I have to say, pretty much as we expected. E-commerce and big deals and discounts are leading the way. Brick and mortar, far less. Depending on the sourcing, you can see that brick and mortar sales are up slightly, or foot store traffic fell significantly. That's all the data wrapped up from Adobe Analytics, Sensormatics, and MasterCard. From our perspective, it really fits with our thinking about digital lifestyle and the cash-strapped consumer investment strategies. But as we think about today, Cyber Monday, it is expected to be the biggest e-commerce day of the year. And yeah, we've had some big ones this year already, thanks to Amazon and various Prime sales day efforts. But today, Cyber Monday, is expected to ring up sales of around $13.2 billion. That will make it the biggest e-commerce day in 2024. We look forward to tomorrow, Tuesday. Why? Well, that's when the final tally should be in. But again, what we've seen so far fits very well with our digital lifestyle and cash-strapped consumer investment themes and models. This week also brings several key pieces of economic data. Again, starting to get a hard look at the month of November from a data perspective. ISM will bring its November PMI data for manufacturing and services, and when we tally both sides, we'll get an overall picture of the economy, its health, but we'll also start to get some indications on how inflation fared during November and what the tone of the jobs market was during the month. These two pieces are extremely important as we think about the upcoming Fed policy meeting. The Fed is very focused on inflation and keeping a healthy jobs market going. Remember, the recent inflation data that we saw for the month of October tells us that it remains sticky. That includes the Fed's preferred inflation metric, the October PCE price index that we got last week, both headline and core, not exactly telling us inflation is moving towards the Fed's 2% target. So the data that we get this week on inflation and next week will be very important. We do have some other jobs data coming out this week, the usual fare from ADP, the Challenger Job Cuts report, and of course, Friday's November employment report. All in all, we're going to take the data that we get this week and put it into what we like to call the Fed blender. And the outcome will update market expectations for what the Fed will likely say and do when it comes to monetary policy on December 18th. Remember, too, at that meeting, they will be sharing their updated set of economic projections. Given where we are and the timing of it, the focus will be on 2025, GDP expectations, and the number of implied rate cuts. And as if all of that wasn't enough for you, we do have another round of quarterly earnings, and viewed through the lens of our strategies and models, this is what we'll be paying attention to. With regard to AI, earnings from Salesforce, the cash-strapped consumer, Dollar Tree, and Five Below. Cybersecurity, that means Zscaler. Digital infrastructure, we've got results from Marvell and Hewlett-Packard Enterprises coming up. Digital lifestyle, what does Chewy have to say about its shopping? We've also got EV transition with earnings from ChargePoint, and Guilty Pleasure. We'll check in on what Brown-Forman and Duckhorn portfolio have to say. Well, outside of those, we've also got earnings this week from Lululemon, Ulta Beauty, and Kroger. And as we digest all of that, we'll be mindful of what they say about the demand picture. Remember, we're starting to look forward now towards the start of 2025, and given what they're reporting and when they're reporting, we'll be mining those insights. When it comes to the retail-facing companies, we'll be looking for what they say about sales, the impact of discounts, promotional activity, and what that means for their margins. We'll also be checking in on inventory levels as well. The companies that report this week, the retail ones, it will incorporate their learnings and comments most likely from the holiday shopping weekend. So they will be of particular interest to us. We'll be looking for confirmation to the other data that we've been getting and we talked about a few minutes ago. All in all, folks, it's going to be a busy week, and I suggest that you check back with us. We're going to have some signals throughout the week, more rip from the headlines, confirmation data points for our strategies and models. We look forward to seeing you